Hello and welcome to the John Ark Show. Today we're going to interview Andy Schectman. He is the founder of Miles Franklin and is a gold and silver market expert. His economic expertise is highly regarded by people like Robert Kiyosaki of Rich Dad Poor Dad fame and many other experts. If you're at all concerned about preserving your wealth through the coming financial crisis, then stay tuned. Before we begin, I want to encourage you to subscribe to our channel for free. You can also like, comment, and follow us. We're going to have a lot of great celebrity interviews coming up, so make sure to click on the notification bell so you can be notified every time we upload a new episode. Also, we ask that you post a link to today's show on all your social media to help spread the word. Now, let's say hello to Andy Schectman. Hi, Andy. Welcome to the John Ark Show. How are you today, sir?
I'm doing great, John. Thanks for having me. How about yourself?
Oh, it's our pleasure to have you here, especially with all that's been going on recently. Andy, in addition to being a precious metal expert, you also have a sophisticated understanding of what's going on in the world economy. Many experts we speak with privately will admit behind closed doors that they've never seen a more corrupt, manipulated, or fraudulent stock market, commodities market, or crypto market than we have now. Not since Hitler was looting the treasuries of all the countries he invaded during World War II have we seen a level of criminality like this. How would you evaluate what we're now seeing take place in the US and foreign markets abroad?
I don't think there are free markets anymore. There's just manipulations and slaps on the wrist for violations, gross violations that would put the ordinary person behind bars. JP Morgan, as an example, paying a $920 million fine for suppressing the metals market. Their head trader, Michael Nowak, pleading guilty to other violations, including something along the lines of texting with other commercial banks and laughing in coordination to rig the markets and joking about, boy, we smashed that one good, and out in the open. And yet Michael Nowak, who's taking a fall for the institution, is going to prison here shortly, hasn't been sentenced to a time frame yet, but was found guilty. But JP Morgan, who pays a $920 million fine for this act, is still allowed to be the administrator of the world's largest silver trust, SLV. You look at HSBC Bank, a bank that has its roots not in the United States. Here again, allowed to be the custodian of the GLD Gold Trust, and yet has paid billions of dollars in fines for things such as laundering drug money. So when you talk about the people pulling the strings, just in my sphere, in my little ecosystem of precious metals, it's horrendous. But I think the real suppression, the real manipulation in markets, John, centers around manipulation of interest rates. It has been the suppression of interest rates and, of course, the creation of copious amounts of money that has created the massive distortions and the misallocations of capital and resources, and the distortions in price, where price discovery, due to the massive amount of money that's been created while suppressing rates, it has created what in Austrian economics is basically called the crack up boom, where this massive extension of capital and manipulation of interest rates and creates great disparities and misallocations of resources, and price discovery becomes impossible. And this is all done in broad daylight in front of the regulators. Where are they all? But there will be price to pay for this, and I think you're beginning to see that. Like, for example, what you saw in the UK yesterday. Here again, instead of letting Mother Nature cleanse the system like a forest fire cleanses the forest, here comes Bank of England to the rescue again to buy up the bonds to lower rates so they don't blow up the pensions. But they're just prolonging, through more manipulation, the pain and the suffering that will ultimately come at the hand of Mother Nature and mathematics. So yeah, there's manipulation and corruption everywhere. I think you just have to understand it and use it to your advantage best you can.
You know, when I saw that they blew up both Nord Stream pipelines recently and then detonated another explosive device today, all that did was confirm to me once again that the world economy is being deliberately disrupted and placed in greater jeopardy, and that in doing so, the prices for a lot of commodities and services will once again be increased. What do you think?
Well, I think inflation is nowhere near over. And look, we've seen the price in this country. People think, oh, it's getting under control because the price of oil and gas have come back down. Yet they're raiding the strategic stockpile of oil that's supposed to be used for wartime, whatnot, for the military. That President Trump had filled up for the first time in I don't know how many decades. And I think more poignant is, how close are we to a major escalation with Russia? You can look all around you and you see so many signs pointing to idiotic moves. How about the weaponizing of the US dollar as the world reserve currency? You weaponize the dollar. If you don't expect there to be consequences, and you're an idiot or diabolical, and you understood that there would be consequences. They're not unintended, they're intended. When the United States weaponized the dollar and kicked Russia out of SWIFT, what really did that do? Well, first of all, 85% of the world is still trading with them. And second of all, it incentivized this coalition of countries globally to move against this Western hypocrisy, this Western hegemony. And what we're seeing here is just more of the same. And the consequences, I think, are going to ultimately be severe for the dollar, and all of the Western systems, the Western economies are all going to take it on the chin as the rest of the world breaks free from this manipulation. As another example, you've got Russia, China, India, the BRICS countries who are massively accumulating gold. Well, they haven't bitched that the manipulation on COMEX is distorting the price tremendously because they're the ones who have been copiously accumulating it. But now that they have been doing this for so long, and the weaponizing of the dollar and kicking Russia out of SWIFT has accelerated, I think, the way things are going to unfold. Russia comes out and says, well, we're going to issue a new exchange, a Moscow exchange. And as one of their finance ministers came out and said to break the Western manipulation of the London Metals Exchange and the COMEX. So all they would have to do to break that and bust it wide open, when they said in the article they want to do an AM and a PM fix just like London, but they'll do it the real way, and they'll peg it, let's say, at $2,500 day one, and bang, the whole Western system blows up as that gold is arbitraged off the exchanges heading towards Moscow, and it will all move that way until they stop allowing deliveries, at which point the market is rendered a scam that we all know it is, but half the world doesn't. And you'll see gold and silver priced fairly. When you talk about these countries, the BRICS nations and the Belt Road Initiative and all the countries joining the BRICS, you're approaching 85 to 90% of human population. And I think poignantly, we've pissed off too much of the world, and this is becoming a rallying cry, I think. And you can look at all of the countries joining this, from Turkey to Egypt to Iran to Venezuela to Argentina to Mexico. I mean, all of these countries that are Western allies are now moving to and applying to join the BRICS nations and the Belt Road Initiative. And these actions that we're taking, as naive and stupid as one could ever imagine, are going to have consequences. And I ask you this question, people don't quite think about it this way, but I think you should. When you think about Vladimir Putin and the corner that he's been backed into, imagine that, Russia was the US and Mexico, the Ukraine. And here we are being surrounded by these other countries. In this case, it's NATO, but, say it's the shoes on the other foot. We don't want NATO on our back door. And yet Mexico is right there. We're fighting with them. And Russia is paying $90 billion to the war effort, providing intelligence on where to drop the bombs that they provide, and the Stinger missiles and the drones. After they froze our assets and kicked us out of the world financial system, is that not a provocation of war? Sure seems like it is to me. So, anyways, the bottom line is that the decisions that our leaders are making are long past idiotic, and I think the ramifications are going to start to manifest in ways that the Federal Reserve will have no ability to calm down or control.
You know, it's not just the criminality or the corruption, it's also the complete lack of reason and logic. I'll give you an example. The Germans are now cutting down vast swaths of their forest in order to prevent much of their population from freezing to death this winter. They're just chopping down wood on a vast scale. At the same time, they still refuse to turn their nuclear reactors back on. I mean, none of this makes any sense on this planet. So let me ask you this. Some people think that the inflationary rate is 8%. Other people think it's 30%. Well, where do you suspect it really lies?
Well, instead of guessing, I mean, all we need to do is look at the way it used to be measured. People are mistaken when they look at the CPI as an accurate reflection of inflation. The CPI excludes food, energy, and housing because obviously you don't need to eat, live anywhere, or since you're not living anywhere, there's nothing to cool or heat, or you don't need to drive your car. Food, energy, and housing are excluded from the CPI purposely. They used to measure it a certain way prior to 1980. And those numbers would show it closer to 18% right now. John Williams of Shadow Stats, that's all he does, is show the way that the CPI used to be calculated. And it would be closer to 18% than it is 8. It's a joke. Look, I think the ideal of every nation, first and foremost, is to be able to print as much money as it wants, but at the same time, keeping inflation in check. Well, how do they do that? They do that by lying about the inflation rate, which is exactly what almost all the nations are doing. And that's exactly what they did here with the CPI measurement. They continue to update it and change it to fit an inflationary agenda, and lie about those numbers. And, when I started in this industry 33 years ago, they used to publish something called M3, which is the broadest measure of the money supply, which took into account, everything, M1, M2. Then they got rid of that number, saying it was archaic and too expensive and no one used it. They did the same thing with M2 as well. In other words, they're blurring the ability for people to see how much money is being created and is in the system. But as measured by the way they used to do it, we're at 18% plus. You can say the same thing about unemployment numbers are completely screwy. Anything that comes out of the Bureau of Labor Statistics, you should just pull the L out of that acronym, and that's what exactly it is. So, yeah, this is a world of disinformation and misinformation. And, I think if people think inflation's at 8%, just look around you how much more expensive it is to do things nowadays. It's much higher than that.
Andy, I have to commend you. You recently were involved in putting together one of the largest physical silver deals ever when a client wanted you to sell them $50 million in silver, which is about 65 tons, give or take, of metal. Tell us that incredible story.
And well, it wasn't just silver. It was roughly 60% silver, 40% gold. But the client bought close to 900,000 silver eagles. And the balance in gold, a little bit in silver Morgan dollars and peace dollars. And the client was adamant about having only American-made items. And she wanted me to tell the public. It was unusual to talk about it. But the moral of her story was that, look, she's an accredited investor times 10. And I tried to get the money out of the bank on a Thursday afternoon, if I remember correctly. This was the week leading up to July 4th holiday, making things tougher, maybe 2 weeks earlier. But anyways, so one of my outside brokers, Bill Holter, called me and he said, hey, we're going to do a $50 million order. And I thought, well, that's not going to happen. But he's a straight shooter, as straight shooting as anyone I've ever met. All right, well, that would be great if it happens. I didn't give it a second thought. Friday comes along and he says she tried to initiate the wire, but she has to go to the main branch, these satellite branches she lives in. They won't do it. And the main branch is in another state 4 hours away. So she's going to go there on Monday. Okay, Bill, great. Have a good weekend. Didn't give it a second thought. Monday comes along. They tried to put the screws to her to tell her not to do it. And then they said the only way that it could be sent out is if the branch manager was there. She spent all day in the bank and left furious, evidently. And here again, I'm saying, okay, look, these things I've been told for years, these kinds of trades happen, they never do. We've done $7 billion in sales, and the biggest sale I had done prior to that was like $9 million personally. Actually, I take that back. It could have been construed as 16 million because it was a trade. But even still, those kind of orders don't happen, even when you're doing 500-600 million a year in sales. So, okay, fine, Bill. Well, let me know. I'll let you know if I see anything tomorrow. So the Tuesday rolls along, and it's now that's the fourth day. And towards the end of the day, my operations gets a call from a bank asking to verify wire instructions. And it's a good thing I didn't answer the call, because the next question was, well, are you even able to handle an order of this size? And really, I think what I would have said is, whose business is it of yours as a bank? This isn't your money. Anyways, lo and behold, about 20 minutes later, we did indeed get a wire for $50 million. And the client just really wanted the world to know that, putting money into a bank is a whole hell of a lot easier than trying to retrieve it at large levels. And it was a wake-up call to her, and I think to a lot of people who are beginning to realize that the risk that you are taking on, not only when you factor in the paltry interest that you're getting on a savings account, but the bail-in risks that were put into play in 2009, not to mention just the systemic nature of all of these banks and the possibility of one going down and pulling several others with it, isn't worth the risk isn't worth the return. And especially when she had to threaten on the fourth day, going to the regulators and saying, give me my money, or, this is going to get bad. So that's why she wanted me to talk about it. And we did. And it certainly got a lot of attention. But this is, I think, emblematic of what you're going to see. You'll see big money like this come out and gobble up everything that's even remotely available in this industry, because there's a lot of money out there that has been created. In fact, more money in the last 3 years than in the history of the country preceding it. And all of that money, a lot of it went into assets that have blown straight up, and the smart ones have already gotten out on the sidelines. And, they're flush with cash. If indeed they look to precious metals, getting physical product is becoming incredibly difficult. So I think it will define the industry. That is the inability to source product easily, because less than 0.5% of the public owns any gold at all. And let me take that back. The average allocation to the public in precious metals from the Harvard Endowment Fund down to Joe Sixpack is 0.5%. If that just became 2% or 2.5%, it's a fivefold increase, and we can hardly already handle the supply issues. It's just getting really tough. So she was ahead of the curve, and I think you'll see more people like that as things start to get more and more tenuous in the equity markets.
Andy, what steps did you have to take to make sure your client wasn't trying to perpetrate some massive con job on you, and that he wasn't some 15-year-old out of Nigeria? How did you vet him?
The money was wired to us beforehand, and we had enough information about the client to feel very, very comfortable that indeed she was 100% legitimate. So you don't deliver product before you get payment, that's for sure.
And how challenging was it to not only assemble the order, but to ship 65 tons of silver to an individual?
Well, again, it wasn't that much silver because it was only half. It was $27 million worth of silver, but the client has it vaulted around the country. I was able, through the connections that I have, I'm one of only 27 U.S. mint distributors or resellers in the world. And I've been at this longer than just about everyone in the industry. I've been doing this since 1989. Miles Franklin was founded in 1989. And most of the companies out there don't have the laundry list of contacts that I do, a long one, because I was doing this even before the internet and before emails. So I have a good reputation in the industry with the people who secure all the product. I was able to more or less get it done and started being delivered to the depositories within 2 days prior to the July 4th holiday. I'll tell you, there's not a snowball's chance in hell I could do it right now. Not even close. I mean, premiums have gone way up since then, and availability has gone way up. The U.S. Mint called me not too much after that and said, oh, by the way, we're going to curtail production of gold eagles by 50%, all gold products by 50% into the second half of the year. And that was so outrageous to me because, of all the business we've done in the last few years, 90+% of it's in silver. Everyone's been buying silver. And here our government, who, you see premiums currently on silver eagles at roughly $15 over the price of silver. That's 5 times what they were my entire career. And now they're going to limit gold in this environment. It's just a crime. But, I love the U.S. Mint. In many ways, it has shaped and defined my career. But I will tell you that they have turned into an awfully inefficient entity that is making it very difficult to get product in people's hands. So there is not a chance in hell that I could do a $50 million deal in 2 days now. You'd be talking allocations into the first quarter of 2023. As I look at the inventory sheets of the biggest wholesalers in the world, and they're all out. Many of the things for the U.S. Mint says not till 2023. So they're done producing stuff for 2022, and we haven't even hit Halloween yet. This is a problem. And I think emblematic of what I've been saying publicly for 2 years. Market will be defined by an inability to source product on many levels by the public. If you're not jumping on this, you're not going to get product when the public wakes up. And I get a lot of heat for this because people think, well, I can find it right now. Yeah, so can I. And I have. And we have our biggest year ever volume-wise. It's there, but it is way more difficult and way more costly to get it now than it's ever been. And this is with just a slight expansion into the mainstream. What happens when the elephant, not the pimple on the elephant's rear end that us gold bugs, the people who own metal are, what about when the elephant, the public, says, oh my God, what do we do? And they look to metal. I mean, in a matter of seconds, everyone in this country will be out of stock. And that's the truth, truthfully. I mean, go look around right now if you're watching this video and look at all of the things that are out of stock and says, contact me, blah, blah, blah. On my end, where I'm trying to secure stuff months out, it's never been this difficult.
What do you trust least these days? Banks or private safety deposit companies?
Banks by a long shot. I think private safe deposit box companies, I don't know of that many. I work with BRICS. I've worked with them for 11 years. I trust them as much as any entity I've ever worked with, ever, in 33 years. I work with a group called the Dakota Depository out of Fargo, North Dakota. Worked with them for 33 years. They're family to me. They're private, honest as can be. I mean, there's crooks in every private industry. But the banks, on the other hand, are too systemically connected to each other, and I think that they're in trouble in many respects. And so I don't know. I think the banks, in my mind, I trust far less than a company that stores precious metals.
Do you think the $65 billion the Bank of England is going to pour into the market. Do you think that'll be enough to prevent an imminent problem again, or do you think it's just a matter of time because the dam has cracked already?
Yeah, that's just a Band-Aid on a gaping wound. Um, it's just more of the same. Kick the can as far as you can until the can can't be kicked anymore. So no, it's not going to change anything, and in fact, it's only going to create hyperinflation in the British pound. So no, I don't think it fixes anything, but maybe just for a little bit.
Now, as you know, the hedge funds, the sovereign funds, and family offices are purchasing vast amounts of gold and silver, and they're taking possession of it. How disturbing is that to you and the people you do business with? Does that ring any alarm bells?
It's not disturbing to me. I've been talking about this in all my podcasts for a year and a half to 2 years now. And I don't know why people aren't listening to me, because I think the picture behind me of President Roosevelt confiscating gold in 1933, all of the wealthy people in this country, the politicians and the very wealthy, the elite, had sent their gold off by steamship to safe deposit boxes in Europe long before it happened, because they were clued in on what was coming. And the same thing here, you are seeing a systematic removal of metal from the COMEX, the London Metals Exchange, and the authorized participants are draining the ETFs. And give you an idea, just a few weeks ago, normally the COMEX trades 100-ounce gold bars, but they do have kilo bars, and I guess it's a mini contract or whatever it is. It's not what the sovereigns trade in, not what the governments trade in. It would be more along the lines of, smaller contracts. But in what I'm about to tell you, I think it is family offices and sovereign wealth funds that have done this. But in one day, a few weeks ago, 41% of all the gold kilo bars was taken off the Chicago Mercantile Exchange, totaled 174,600,000 ounces plus, somewhere in that neighborhood, in one day. And so, who's got that kind of money to take $174 million worth of gold bars off of the exchange? You're seeing, in 2020, I started talking about this because out of nowhere, we saw a new group of reportables on the commodity exchange report. It's called the Commitment of Traders. And it's a report that shows the positioning of the largest traders on the commodity exchange. And typically it would consist of the commercial banks on one side and the hedge funds on the other. It wouldn't show all of the traders or all of the positions on the exchange, just the positions of the largest traders. And then out of nowhere, now it was just the commercials, and they called it the specs, which are the hedge funds, my whole career. And then out of nowhere in 2020, you see this third group of reportables on there. Well, what's that? And they were called the others. They are called the others, and it is largely thought to be family offices and sovereign wealth funds. Well, in 2020 alone, the others, as they're called, took more silver off of the COMEX than we see delivered in a decade. They took more gold off the COMEX than the Bank of Japan holds in their official holdings. And these numbers have continued to grow over the last 2 years, and not just off of COMEX. We're seeing a phenomenon called exchange for physical, EFP, where they take these contracts that they would stand for delivery on COMEX, but they exchange it for physical delivery on the London Metals Exchange. And they do this, I think, to be a whole lot more clandestine, private in their drawdown of physical metal. It would be noticed much more on COMEX. So between the exchange for physical, between the bleeding down of silver off the London Metals Exchange, to which it's the lowest level ever in recorded history, to seeing the exact same thing happening on COMEX, to the authorized participants of SLV taking 100 million ounces in the last 4 months out of SLV. Only the commercial banks and the authorized participants can do that. Where's all this metal going? And so the biggest, most sophisticated money in the world is doing just that. This is a precursor to whatever is coming. And I think when you put it in context to gold being reclassified a tier 1 reserve asset by the Bank of International Settlements, the only other one in the world other than US dollars in 2019, you can just see these pieces being put into place where companies or countries and financial institutions and family offices and sovereign wealth funds are, like most big money throughout all of time, is one or two steps ahead of the crowd. And they'll be positioned, and they will not just survive in what comes next, they'll be the ones who thrive. But they did it before it became obvious. And unless you're really looking or listening to a knucklehead like me, you're not going to notice it. But I'll tell you, it's vastly different right now, vastly different in terms of an environment than anything I've ever seen in 33 years.
Are the Chinese and the Russians accelerating their accumulation of gold and silver, or is that not the case at the moment?
I think they have, whether they're accelerating it or not, they're the largest producers and accumulators of it in the world, and have been for many years. China produces and accumulates more gold than anyone. Russia has been accumulating more gold than anyone for the last few years. Don't forget about India, and South Africa produces so much of it. You have a lot of the countries that are producing commodities joining the BRICS. And the BRICS just came out and said, we're going to issue a new world reserve currency, not just pegged to currencies, but also to commodities. Remember, gold was reclassified, the world's only other tier one reserve asset in 2019, the only other one next to US dollars. Do you think there's any reason why these countries are doing what they can to accumulate it? Turkey, who just said they're going to join BRICS, has bought more gold in the first 7 months of this year than any country on the planet. So you have these countries, Hungary, Poland, Czech Republic, all these countries are buying gold, and all of them have either expressed interest or already have applied to the Belt Road, to the BRICS nations. You're going to see a breaking of a lot of alliances that will be rallying against the Western hegemony and the Western influence that has been, centuries old. But that's not enough to make it work. What makes it work, the glue or the impetus to come to the table is, look at what they did to Russia. You're next, China, and your influence on Taiwan, and Saudi Arabia. You're next, because you're even thinking of ditching the dollar for petrol reserve. And look what we did to Hussein and to Gaddafi. You're not immune to that. Look what we did to Syria. We're coming. Well, not if all of these countries join together, which they're doing. Every single OPEC producing country is on the Belt Road. 6 of the 13 are already applied to or on the BRICS nations. The 7th of the 13, United Arab Emirates, just applied for the BRICS Bank. This rallying cry of Western hypocrisy and hegemony is bringing people to the table. It is the pledging of assets or commodities to a new currency system that I think will ultimately change things in the world dramatically. And you look at the Belt Road Initiative, which is connecting 80%, 70% of human population, 40% of global GDP before industrialization. Most of the contracts for the last 3 years have settled on the new Chinese digital yuan. And so you have $20 billion in transactions that have settled on the yuan or thereabouts. Call it a beta test. So now you have all of these countries where Xi and Putin just said, we are issuing a new BRICS world reserve currency, and it will be pegged to currencies and commodities. What better way to roll out a distributed ledger technology and to show the immutability and the veracity of the commodities like gold pegged to the system than to use the successful 3-year beta test of the digital yuan to roll out a new BRICS currency that has everyone's contribution shown on the distributed ledger for everyone to see, whatever it may be. The article that was one of the finance ministers of Russia, said it would use things, and I'm paraphrasing, gold, silver, grain, hydrocarbons, fossil fuels, sugar. So all of these countries that are coming on to the BRICS stage and joining together against the Western dominance that has outlived its usefulness in their minds, will pledge a commodity and use the distributed ledger technology to show the veracity and the immutability of it. And I think that's when things really begin to change in the West.
Let's assume that the Chinese are able to complete their enormous takeover of the world economy by finishing their Belt and Road Initiative. Once they do that, is there a non-military solution for the U.S., or is this thing unbreakable at that point?
I don't know. I mean, that's a good question. I think the nations that comprise the West are all insolvent and broke. Japan, U.S., Canada, and the European Union. Those countries are broke and insolvent and wait until interest rates rise. If this were to happen, a byproduct of that, I believe, would be OPEC ditching the dollar. Remember, every one of the 13 OPEC producing countries are on the Belt Road. So all it would take, Saudi Arabia is joining BRICS. They've announced their intention to do so. And it's been the protection of the Saudi kingdom since 1974 that has given the dollar the petrol status, the world reserve status. So it wouldn't take much for Saudi Arabia to say, hey, thanks for the memories, guys, but now that all of us OPEC producing countries are joining the Belt Road Initiative, and many of us, the BRICS, with our brothers and sisters around the world that comprise 90% of the world's population, we think it's only fair to open up oil sales to yuan, to ruble, to rupee, to gold, euro, and dollars. When that happens, I think you see a religious experience in the West where all of the countries who have had to own dollars for the last 50 years to buy oil will dump them and will use other currencies. And then it becomes a hot potato, and others will start to dump as the dollar is plummeting. And as the dollar loses value and ends up on shore here in the States, losing precipitous value, the byproduct of that is rising interest rates, massively spiking interest rates, as they have to rise to compensate for the crushing valuation of the dollar. And when that happens, it's game over in a matter of seconds. There's your Klaus Schwab Great Reset right there. Saudi Arabia and OPEC dumped the dollar. They're being protected by Russia and China and the BRICS nations. The dollar collapses in value as everyone dumps it because the synthetic demand for the dollar has been created by the fact that every country in the world has had to own it since 1974 in order to buy oil from OPEC. And that represents the majority of all the oil that's sent around the globe. Everyone's had to own dollars until they don't. And when those dollars are dumped in favor of other currencies and other commodities and whatnot, and they all end up here and interest rates spike, the inversely correlated effect to stocks, bonds, and real estate, all at all-time highs, inversely correlated to a spike in rates, collapses all three. Stocks, bonds, real estate, and dollars all collapse by one decision. OPEC to say, thanks for the memories, but we're moving on. And it's real, it's serious, and I don't think people get that. And that is why the Fed is a sideshow. If you see what happened in the UK today, where raising rates to 4 or 5% or whatever the hell it is enough to break the pensions and blow up the system, what happens when those rates go 3 times that? Because the world dumps dollars and or dumps all the Western system. It's a spiritual and religious experience. And I think that is the biggest thing that people need to take away from this interview. It has nothing to do with the Fed. It has nothing to do with anything at this point other than what's going to happen when all of these countries move away from the West. And was the weaponizing of the dollar intended? As Klaus Schwab said, there'll be a great reset. Was it intended? How do you have a great reset and not be blamed for it? Well, you have a villain, those bastards, those BRICS, that Putin, Xi, those sons of bitches in OPEC. Well, there's your villains. And now the whole system resets because it all implodes as interest rates go double digit as the world dumps dollars. And if you feel rich in your home and your 401k, you'll feel destitute in a matter of days or hours. And I hate being the angel of doom, but it's so obvious that this is happening, and that is the fragility of our claim to being world reserve currency. Before he took us off the gold standard in 1933, the dollar was backed by gold. But when Nixon closed the gold window in 71, it's backed by nothing. And it's lost 90% of its value since then. And it was the protection of the Saudi kingdom, and by extension, the agreement between them and the rest of OPEC to value oil in dollars globally. You're already seeing that break. Just the other day, Saudi Arabia and India got together and said they're going to build oil storage facilities for oil and a new Rial rupee trade agreement. You have Saudi Arabia selling their oil right now to China for the petro yuan bond, which is immediately convertible into gold on the Shanghai Gold Exchange. You have Nigeria, another OPEC country, selling their oil to China for the petro yuan bond. You have Russia and Saudi Arabia and Nigeria, all of them have signed a joint military cooperation agreement. In other words, Russia is now doing what we've been doing since 74, protecting them. You have all of these countries on the Belt Road Initiative, part of China's infrastructure plan, protecting them. The handwriting is on the wall. If you are not a contrarian, you're going to be a victim, period. That's the way I look at things right now, unfortunately.
By the way, I heard this rumor years ago. Tell me if you heard it and if you think it's true. I heard that when Nixon took us off the gold standard, the Chinese thanked him by sending an enormous cargo plane full of gold to Washington as a gift to him. Have you ever heard that? Does that have any ring of truth?
I have not heard that, but I have heard that one of their leaders and whoever it was at the time, I don't remember, Mao or whoever it was, said this is the beginning of the end of the dollar right here, right now. They have sown the seeds of their own destruction. And I agree to that. I mean, all politicians have chosen inflation over austerity since the beginning of time. And when you remove the peg the way that Nixon did, and allow the government to print at will, it will ultimately end the same way every time, and that is in the fact that all currencies, paper currencies, fiat currencies, are inherently meant to die. They just get inflated away to their intrinsic value of zero.
Michael Saylor, who was the CEO of MicroStrategy, stepped down from his CEO position because it was rumored that they were displeased with how much Bitcoin he was accumulating. When I listen to Michael's pro-Bitcoin logic, it is impeccable. It's very strong. The only problem I've had with it is that he refuses to diversify his portfolio. He keeps putting everything in one basket. What are your thoughts on that?
I am less critical of that than most people would be. I think to only put it into Bitcoin is a mistake, but I think to be broadly diversified right now is an even bigger mistake. Broad diversification is a sampling of asset classes, most of which in good times don't move in unison or in harmony. The way to win in investing is to identify the primary trend of the marketplace. And when you realize that in this case, rising interest rates will destroy this entire economy, stocks, bonds, and real estate, the three pillars of wealth, to be diversified amongst those three. It's a typical Wall Street mantra is 60-40 split between stocks and bonds. That's the quickest way to lose everything in this environment. And I think the way to win is to identify the primary trend and take a very big position in it. Now, where Michael and I would disagree, and let's not even talk about Bitcoin, let's just call it asset A, is that you should broadly diversify within the primary trend. For me, it would be I look at the dollar as the primary trend is of a falling dollar. So I would buy things like precious metals. I would buy farmland, maybe oil and gas exposure, agricultural ETFs, whatever. I mean, if you have to be broadly diversified, some mining shares, broadly diversified within the primary trend. And I think that's the way you win. He's putting all of his eggs in one basket. Why not buy Ethereum? Why not buy other cryptos? Why not buy precious metals? I think it would only make his argument stronger. But I do believe that traditional assets, traditional investments are going to be exposed for perhaps not being the only pathway to retirement. And the fragility of a system that has been allowed to blow up due to manipulation of interest rates and easy money, where hedge funds can borrow billions of dollars at next to nothing, pump it into equities and cryptocurrencies and real estate, make huge bonuses, make huge amounts of money on the elevation of those assets, pay off the loans with no problem whatsoever. They borrowed for 1% or less from the Fed. I mean, it's created massive distortions and misallocations and anomalies in price. In this environment, when rates rise, it's going to be a scary experience, because much of the market moved up on things that aren't really organic. As an example, these low interest rates, the companies could borrow money at next to nothing and buy back $50 million worth of their shares, or $100 million worth of their shares. So now they're holding their shares, and as the act of buying those shares from the public jacks the price way up. So now you have an artificial price of a stock based upon the fact that companies could borrow money for next to nothing and buy back shares from the open market. And those companies, where do they get all their wealth? In shares and in options and stock, payments. They sell it and make a fortune. But now these companies are sitting on huge, vast quantities of their shares that were accumulated at too high price levels. And when the market starts to correct and you start to see bankruptcies, and their clients can't even pay their bills and they're going bankrupt, in this systemic nature, just as those types of share purchases on the way up really fueled, in many respects, much of the rise in a lot of these companies on Wall Street, these big stocks, fueled it on the way up, it will fuel it even more on the way down. And that's why in Austrian economics, when you have a massive blow-off like this that is fostered by expansion of credit and easy money, it is always followed with a bust, and that's coming. And it's because it was illusionary on the way up, which will only magnify in significance on the way down.
We have an election in November. Tell me what you think will happen to the precious metals market if the GOP prevails, and what do you think happens if the Democrats prevail in November?
I don't think it matters one way or the other. Mm-hmm. I don't. And I don't think it matters at all. I think both offices have no chance of fixing this problem unless they're willing to go into a depression. If they choose inflation over the tough decisions, the currency is destroyed forever. Interest rates will go up. It'll be hyperinflation. If they make the tough decisions, then it'll be a depression. So in either case, whether it's hyperinflation or Great Depression, whether it's massive inflation or incredible deflation, gold is the best place to be. They always talk about its inflationary qualities, and a deflation or a depression. Gold and silver are two of the only assets on the planet that are not simultaneously someone else's liability. And so the removal of any counterparty risk or liability makes gold and silver incredibly valuable in a depression or deflation. So I think it's a hedged bet one way or the other, but I don't think either office, even if you get a white horse, Republican white horse in, and even it's my guy down here, DeSantis, who I love. I would hate to see him leave, but I'd like to see him run our country. He can't fix this. We're too far down the rabbit hole. And if he does fix it, he'll be hated because it will come with an incredible amount of pain. Imagine what would happen if we woke up to find the majority of the entitlements canceled, food stamps, and welfare payments, and, the tough decisions, the ones that the politicians have not really had the nerve to do. We'll see. I guess we'll have to see.
What do you think is potentially more damaging to the U.S. economy and the world economy? Is it the growing alliance between China and Russia, or is it the Ukraine war going nuclear? What do you think the real threat is?
Well, God help us all if the latter happens. But no question about it, it is the coalition of all of these countries, starting with China and Russia, and not just ending there, the rest of the BRICS nations and the rest of the countries around the world, from South America to the Middle East to Europe, these countries that are all joining on and signing on, including Mexico, for God's sakes, wants to join the BRICS. So, that from an economic standpoint is by far the biggest deal to all of humanity. God help us the day that a nuclear bomb goes off. That's a whole different can of worms in my mind. But I think these countries can do what they want to the West without ever going down that path, simply by forsaking the dollar and trading amongst themselves. You look at all of the agreements that are being struck that are not using the dollar anymore. That's exactly what's happening. And it's happening in hyperspeed. It's starting to go faster and faster and faster. So we're getting close to that moment. Let's just hope we're not getting closer to the latter moment. God help us all if we do. But when you see, 3 explosions on the Nord Stream and the Nord Stream 2 pipeline in the last 2 days, well, that pushes us closer to the,
and a fourth
to that
one
moment.
today.
And the fourth one. Okay.
Yeah.
Well, that's the, that's real, and people should take note. So these are not trivial things, but let's hope that doesn't happen.
If you had to guess, how much do you think prices will increase over the next 12 months for commodities, food, gas? What does your gut tell you?
I don't know. Look, I think that anyone who picks numbers is guessing. I'll tell you that ultimately, I don't think we've even begun to see the end of inflation. I think they will increase dramatically after the election, and maybe even after the midterms. I think, I don't know. I think everything is going to increase. And I think that's why you prepare now when there's been a little bit of a respite. But, look, 8.5% inflation is nothing to be joyful about. And that's not even the real number when you look at the way the CPI used to be calculated. Remember, shadowstats.com. So every government will do what they can, including our own, especially our own, to lie about the inflation numbers. So inflation has not gone away. It's only going to get worse. When you look at $400 billion price tag on Biden's tuition bailout, and then the Inflation Reduction Act, another 400, 500, 600 billion. I mean, you're talking $1 trillion for these 2 deals alone. 1 trillion seconds ago was 31,688 years ago. They printed over $6 trillion in the last few years. That's what they tell us is probably much more than that. If you look at the amount of money right now in the reverse repo market, the Fed's reverse repo market, that means the banks have over $2 trillion in the reverse repo market because they don't want to lend it out in this environment. Instead of lending it to you and I, they're getting paid 3% by the Fed with safety. That means they're very scared of that money that all belongs to the commercial banks. They don't want to lend it out. That's ominous. You don't see this kind of money in the reverse repo market. Banks make money by lending. And in this environment, it's like put together with the drawdowns on metal, the positioning on the COMEX where the commercials are long right now. I've never seen that in 30 years. The big money is getting ready for something, and don't know what that is, when that is. I choose not to go out on a limb and pick numbers. Just simply say that when you look at mathematics and logic, it's coming. And I've been the little boy who cries wolf for a long time, but at the end of the story, the wolf comes. And I'm telling you, the wolf's going to come. Don't know when, don't know how, don't know why. I do know why, I just don't know what's going to precipitate it. But the wolf's coming, and the biggest money in the world is, you can tell, they believe so too.
Elon Musk has announced that he's thinking of building a lithium processing plant of his own. Do you believe investors should start looking more seriously at lithium as an investment?
If we're going to a green world, yeah, it's a massive component in battery powered vehicles. So same thing with silver. And the interesting thing about that is that China possesses about 80% of all the world's rare earth metals that are used in battery production. So, yeah, I think he's smart. If you want to continue to produce batteries, you better have access to the materials, being silver and lithium and other items, platinum, other items that are used in the mass production of batteries.
How is the silver mine market? Are the Chinese and the Russians and the U.S. purchasing more of these silver mines these days, or is that not the case?
I don't know that to be the case. There's, of all the silver that comes to to market, only 35% of it comes from primary silver miners. It's a small group of miners. 65% comes from byproduct mining of other metal by other countries. So, other companies that have no business mining silver. They're mining copper or tin or gold, and they stumble across silver. So it's a small select group of miners that bring the silver to the market. Again, only roughly 250 million of the 800 million that comes to market comes from those silver mining companies, because it's found in nature in a form called epithermal. The big deposits were found years ago because epithermal means near the surface. And so big deposits were found a long time ago. There's just not many silver mining companies out there. I don't know if they are being accumulated. But look, China mines more gold than anyone in the world, and I'm sure they're mining plenty of silver too. So as they stumble across it, even if they're looking for gold, very often you'll find silver along the way.
What is the best way for individuals to convert their precious metals to cash when they need it? Is it mailing it to a company like yours? Is it going to a pawn shop? What do you advise?
Yeah, to a company like mine that has a long reputation and a good one, you'll get a better price than dealing with the pawn shop. But look, gold and silver are homogenous, and so the difference in price from one company to the next will be their ability to pay the fair rate, or maybe there's a convenience rate for dealing with the pawn shop. But you sell it back through a company like mine, you'll get a higher price than you will at a pawn shop or a local shop, but you won't have the convenience of just walking in and walking out with money.
If somebody mails you their gold or silver today, how long before you deposit their funds in their account, typically?
Just a couple of days before we check it in, make sure it's legit, and then send them a wire.
Okay. Well, Andy, before we wrap things up, how can people reach you and your company?
Our new website we've had some setbacks. I would have hoped it would have been done weeks ago. It's going to be a couple more weeks. Our website now is there from informational standpoint. We've closed our online store. So our website is milesfranklin.com. If people would like to receive a price list of which we will be as competitive or more so than everyone in America, we're licensed and bonded, maybe the only major licensed and bonded company in the industry. We've never had a customer complaint in 33 years. And we're U.S. Mint authorized resellers. Send us an email, info@milesfranklin. Ask any questions you'd like, ask for a price list. In a few weeks, the website will be up. But in the meantime, if you're looking to buy metals, I think you owe it to yourself to give us a shot. I think you won't be let down. You'll be surprised at what we can offer, price we can offer, and at the level of expertise that all of my staff has, and the 15 plus brokers that we have that have a rich history in this industry, that are able to answer questions that are not just related to product, but macro and microeconomics and world events that should help shape your decisions, if you will, as to why you're buying gold. It's not what, it's why. And that's the most important thing.
Andy, I want to thank you for coming on the John Ark Show. We wish you all the best, and you are always welcome back on the show, my friend.
Yeah, I appreciate it. Thanks for having me, John. I'll look forward to that. Pick up where we left off next time.
Thank you.